Greetings and thank you for joining me on Victory Independence. I just want to talk to you about the volatility that we saw during the last week. The first thing, gold. I've been talking about gold for over 2 years now, almost 2 years officially on YouTube. Since about 2004, 2005 with my family and friends, but of course those emails just go straight to the trash. Gold goes up, it goes down. And you know what? I have been saying this since the beginning, and it baffles me, and it kind of frustrates me sometimes. When I tell people to buy gold, on probably about 95% of my videos, I let them, hey, it's going to go down when the market goes down. And, it's going to be very volatile, have large up and down swings. In fact, I say silver's going to have even bigger up and down swings. It's going to be like a roller coaster ride for silver until we see that day where the dollar has a run on the currency, or California files bankruptcy, or where China and these other nations completely decouple themselves from the U.S., or where the stock market collapses, 15 million people are unemployed, and everybody finally realizes there's no job growth, there's no driver. The U.S. economy is screwed. So I think we're there. I just don't think anybody's acknowledged it yet. And they will eventually acknowledge it. I do believe the word depression will be used in 2010. Right now, they're really spinning hard for that recovery talk. So right now, gold is attached to normalcy, the normalcy of the system of fraud that we live in, but normalcy. So until we see that big move, gold is going to just kind of stay in its same pattern. Yes, it will have new highs, but it will also have huge down moves on the days people are selling gold because they need liquidity. They need cash. They're getting out of assets to cover losses, to cover their shorts. So expect gold to go down and look at those days as buying opportunities, because gold relative to other things priced is a great store of value. It's a finite currency. It's created by the earth, created by God. Not by man. Now, the bear market, look, I'll tell you what my actions are. I don't think we ever left the bear market, first of all. I think that was a bear market rally. When you go up 60%, we haven't done anything like that since the last depression when we had a 50% retracement after the market made initial lows. And then, of course, it proceeded to make significantly much lower prices on the Dow Jones. So I think we're in the same scenario. Well, with the exception that the government has thrown in $600 billion of unaccounted for stock purchases. That's according to Trim Tabs. The argument that that's not true as well. It's a conspiracy. Okay, I don't care. You can say that, but show me where the $600 billion came from, and I'll drop it. I believe the bear market is going to continue. This is the deal. This is what I'm doing next week. If the market goes down, that I'm going to hold off on buying more bear funds. If the market starts to go up, then I'll probably purchase bear funds on Tuesday. But I'd really like to see it go up at least to 10,250 before I get in. If it falls through the floor, then just jump on in as fast as you can, because if it starts falling significantly, and we have some type of Lehman Brothers moment, where Greece or some sovereign nation basically completely defaults, then you're going to want to jump on in. It'll be safe, in my opinion. As far as the 2010 election goes, I think this is why you're going to see a lot of data massage. We just saw it with the unemployment data. We've been seeing it with GDP, and I know we've always seen these things massaged, but we're seeing them, it's more radical. The lies are blatant. I mean, you increase the amount of people unemployed, and then you lower the rate. I mean, these things are blatant, but it doesn't matter. It's all for the headline, because that's all that people really look at is the headline. And they go, wow, I heard unemployment went down. That's good. And that's as far as their thought process goes, and maybe it helps their opinion to go out and buy some more shoes or something, even though credit is continuing to contract. I think for 11 months straight, credit is contract for the American consumer. Yet somehow there's all these retail jobs being created. I mean, none of it makes sense. None of it adds up, and it's especially not going to add up in the 2010 election. And unfortunately, you're not going to see any real change from state or local governments. Look, the fact is, most of them are all Keynesians, and it's hard for them to cut these programs that are killing us because they want to get reelected. They're like, well, I'll just extend unemployment benefits one more time, just one more time. So I don't know if they raised the debt ceiling today. I know it was in the news this week, but they're going to continue doing these things to get the 2010 election past them. And then I think after the election, some hard decisions are going to have to be made, or you're going to see a run in the dollar. I think it could happen any day. I've said that for almost 2 years now, that the dollar run could happen in years or it could happen in hours. The fundamentals for the dollar continue to deteriorate, continue to get worse. The nation continues to get worse. Remember, the dollar is simply backed by the good faith of the government of the United States and its consumers and its robust economy. But the fact is the economy isn't robust. They can put out all the numbers they want. It doesn't change the fact that Main Street is bleeding. The demographics for the credit expansion, the demographics for the baby boomers, it's not changing. It's getting worse. So anyway, I'm going to continue preparing. I'm going to continue buying gold. I'm going to continue buying silver. And I'm getting out of the U.S. currency. Yeah, I might take some hits in the short term. But you know what? It's like Schiff says. I'm not going to play musical chairs with this thing. It's too big. It's unprecedented. Anyway, talk to you guys later. Bye.